Okay, good evening, ladies and gentlemen. This is Floyd. Um, Today we will be talking about cryptocurrency. Um, we'll be taking a peep into the world of cryptocurrency. And I think for those who are planning to come into this space, I think it's um, it's important that you have the basic knowledge uh, and a brief historical background of what you are getting into. So you must have heard about cryptocurrency and you may be wondering what it's all about and the reason for the craze. Simply put, cryptocurrency is a digital asset designed to work as a medium of exchange using cryptography to secure the transactions on a typically viewable public ledger, otherwise known as blockchain technology. It's also a decentralized currency that uses cryptography for security and verification purposes during transactions. It makes use of a decentralized control as opposed to this to centralized digital currency and central banking system. According to financial experts, excuse me, cryptocurrency can vitally um according to financial experts, cryptocurrency can vitally act like a large property right database and can be used to execute and enforce two party contracts on items like automobile and real estate, thereby eliminating expensive brokerage and legal fees. The model of all cryptocurrency is Bitcoin. Aside Bitcoins, there are over 1,000 cryptocurrencies known as altcoins, that is, alternative variants of Bitcoin. They are listed on CoinMarket Capitalization, as CoinMarketCap, CoinGecko, and others. Some of these coins are Ethereum, Ripple, Dogecoin, Electroneum, Litecoin, Stellar, that's SLM, Monero, Dash, Cardano, BNB, so on and so forth. Some of the notable cryptocurrency exchanges where cryptocurrencies are traded are Binance, Bittrex, Bitfinex, Kraken, Hotbit, so on and so forth. Some of the wallets that can be used to store crypto assets are Blockchain, Trust Wallet, Coinbase, etc. For the purpose of this presentation, I will be dwelling on Bitcoin. Yes, Bitcoin, being the first cryptocurrency, was created on the 3rd of January 2009 by Satoshi Nakamoto, a Japanese pseudonymous developer and cryptographer. Satoshi was unhappy with the global economic crisis at the time and centralized financial institutions, bailout, and all of that. He now saw the need to create a purely peer-to-peer version of electronic cash that will allow online payments to be directly sent from one part to another without going through a financial institution. A total number of 21 million units of Bitcoin was created. The initial value of Bitcoin was negotiated on the Bitcoin forum by early adopters. The first notable transaction carried out was where 10,000 Bitcoin was used to pay for pizza, sometimes in 2010. This 10,000, if you know the worth of this 10,000, just multiply it by $49,000. You know what that is. So Bitcoin is an international electronic currency. Like I said earlier, it is a new form of money created on the basis of the program code. Bitcoin is not owned by any state, companies, or individuals. For this reason, Bitcoin has become the world's first decentralized means of payment. Money transfers are made on the peer-to-peer principle without intermediaries between the sender and the recipient. In the same vein, Bitcoin is a form of digital currency created and held electronically. As stated above, no one controls it. Bitcoin is printed like dollars or euros. They are produced and mined by people, and increasingly businesses running computers all around the world using software that solves mathematical problems. Bitcoin is like a gold, or rather is like gold. Gold is mined out of the ground, while Bitcoin is mined via digital means. Like gold, Bitcoin has a limited and finite supply. Since there are only 21 million units created, according to experts, once these limited units have been mined, the world is going to witness an astronomical increase in the price of Bitcoin. The people who enjoy Bitcoin at the moment are the early adopters. Bitcoin is the first example of a growing category of money known as cryptocurrency. Bitcoin can be used to buy things electronically. In that sense, it's like conventional dollars, euros, or yen, which are also traded digitally. You can send money anywhere and it will arrive minutes later, as soon as the Bitcoin network processes the payment. However, Bitcoin's most important characteristics and the things that makes it different from conventional money is that it is decentralized. No single institution controls the Bitcoin network. This puts some people at ease because it means that it means that a large bank can't control the money. Fine, but there are reasons why Bitcoin should be adopted. Number one is high safety level. No one can block a Bitcoin wallet. Bitcoin does not depend on central banks, local and international laws. Yeah, even though there are some countries that are struggling to regulate cryptocurrency in order to curtail financial crime and terrorism funding and all that, yeah, religion and other things. Banks and the government do not control your Bitcoin. They are only available to you. The wallet is created anonymously. Your wallet is more like your bank account, while your wallet address is like your bank. Sorry, your wallet is more like your bank account, yes, while your wallet address is your bank account number. The difference is that Bitcoin wallet address is not intended to be permanent, but just a token for use in a single transaction, after which a new address is generated afterwards for subsequent transaction. Cryptocurrency cannot be faked and payments cannot be cancelled. Number two reasons is that cheap transaction anywhere in the world. Transfer fees do not depend on the amount of income less than 1 USD, regardless of the amount, yes. Although, as it stands, some of this, there are some currencies some blockchain network like Ethereum that charges high. I actually think they're currently working on it, but Tron network is cheaper. And then Smart Chain, Binance Smart Chain, the fees are cheaper. You can transfer money to anyone from anywhere in the world. Number three is convenience. Unlike bank transaction, Bitcoin transaction may be carried out on a 247 basis. You can decide independently when to transfer your money. There's no time. Anytime you feel like, whatever time you feel like, Monday to Sunday, you can send your money at any time. Number four is instant transfer. The speed of transfers via Bitcoin is a few seconds or 10 to 60 minutes when you are dealing with large amounts of money. It depends on network, though. Most times network gets congested and transfers are delayed. But outside that, the speed of transfer is amazing. Number five reason is protection against inflation. National currencies depreciates annually by 1 to 20%, sometimes more. Since Bitcoin is backed by a limited number of units, which is 21 million, it is protected against inflation. Cryptocurrency is becoming more and more popular. And since people do not spend money on fees and instantly exchange money, investing in cryptocurrency can actually help a common man because it is it has a higher return on investment. The best way to invest in cryptocurrency is to buy and accumulate in your wallet and sell when the price appreciates. Yeah, there is nothing to worry about when the price of Bitcoin depreciates, because it's bound to bounce back since it is naturally an appreciating asset. The price of Bitcoin is determined by the forces of demand and supply, coupled with the fact that Bitcoin has a limited quantity. So the right time to buy is when there is a dip, that is when the price goes down. When users buy the dip and hold, such action forces the price up. Then when they dump, the price dips and so on. Now, you must have asked yourself what will happen to Bitcoin during a financial crisis. Now, the question every cryptocurrency enthusiast should be asking is, what could happen to Bitcoin or cryptocurrency at large should there be a global economic meltdown? Since it will be the first since its creation and adoption, according to Elmos Kyriakis, a cryptocurrency expert, it will come as no surprise that Bitcoin could get into trouble during a financial crisis, as it can be considered a high risk investment due to so many factors. Market risk is one of the factors. I almost believe that Bitcoin has only been around for over a decade and still remains a highly speculative asset that is purely driven by supply and demand. The only reason why Bitcoin holds value today is because of the growth expectation and possibly future use cases. Yeah, other factors are regulatory risk, security risk, insurance risk, and fraud risk. However, Bitcoin can only suffer a momentary setback in the event of economic crisis because it has the potential to appreciate almost immediately. In the future, I personally believe that the world national currencies will emerge in a single digital currency. Cryptocurrency strives to overthrow social inequality, free people from the bank's operations, and make the world a more just place. Suffice it to say that cryptocurrency is a disruptive technology. So, guys, um, I think this is what you need to know about cryptocurrency. This brief explanation. You're going into this space. I think there are other things that you need to know, which is the rules of trading. I will be presenting that soon, and I just want to thank you for your time. I think we are done here for today. Please do not forget to like our video and subscribe to our channel. Thank you so much. I appreciate it.